What's going on, traders? It's Lucas here from the Commitment of Traders Club. Thank you so much for joining us today. We've got a great video lined up for you guys today on the pair USD Swiss franc. It's a pair that we took as part of our club members, and I wanted to show you how you can profit massive pips amount, in this case over 100 pips in a very short time, by following these 3 simple swing trading rules to make you guys become better traders. So without further ado, let's get straight into the video. So over here on the charts, let's break down this trade which we took with our club members and learn how we can make ourselves better traders. So we're looking at USD Swiss franc here on the daily chart. Now what I like to do as a swing trader is I like to look exactly where the market is moving on a bigger picture, not just from a intraday trading perspective. So how do we do that? Well, first of all, we have a zoom out and we look on the weekly time frame. And what can we see on the weekly time frame here for our overall bias? Now what we see is the market has been trending for a very long time to the downside, and quite recently had a retracement to a major key level here, pushed to the downside, and we can now expect the market to retrace potentially to this level here, if I zoom in, to continue then back down to the downside. So as swing traders, we want to make sure that we have biases in our favour to ensure that our analysis is backed up and we can be on the right side of the market and have confluence and confidence in our trading strategies. So bias number 1 in this instance is we are trading with the overall trend. And now what does that mean? That means we're only looking for sell opportunities. We're not interested in short-term buy opportunities, because at any point in time the market can move against us because the overall trend on the weekly, and certainly if we zoom out here on the monthly, is evidently to the downside. We've posted lower lows on the monthly and we've now come up to a lower high. Okay, so on our club page we flagged this a few weeks ago as a potential possible trade, and it did actually come to fruition. How did we get there? So you can see on the weekly I've already drawn on my major level. Now what makes a level major is where price reacts to it quite dramatically and violently. We can see around this area here after the false breakout that market respected this level, came to retest it a few times, and then more recently our previous retest caused a very violent push to the downside. Now as we are trading to the downwards trend, what we want to do is we want to catch that retracement of market to the upside, catch that retracement, and then enter for the continuation to the downside. Now how do we work out where the retracement is going to end? That is our second trading tip, is we use the Fibonacci trading tool. Now for those of you who don't use it, why not? Use it all the time. It's fantastic. Institutions and swing traders and also successful retail traders use it all the time. Now how does it work? We take it from the previous major impulse, so from the high as we're trading downwards to the current low. What does that tell us? Now that tells us from the, as I say, the high which made the impulse to the downside to the low of this current impulse, and there we can see roughly where we want the market to retrace. I've highlighted the golden number for me, or the magic number as I call it. Watch my previous videos as to why. And this is the area on the key zone which we want to see market pull back and touch this as a retracement zone, then the continuation back to the downside is where banks, institutions and successful retail traders trade from. Now straight away we can see that the market has had on the weekly a very strong bullish push to the upside on this retracement, but has started to flag and lose momentum. What we would like to see for us to enter this trade as part of our trading rules is that it touches the 0.618 zone. So we'll zoom in onto the daily and catch this trade. Now what we can see here on the daily is there is a previous area up here of particular interest where the market has found resistance and also support. So it found resistance here, support, and now we can see the market is resisting it again. So, and it does also fall in line with our 0.618% zone. So what I'm going to do is I'm going to draw in the area of interest. Remember, we can't just use a simple line because the market respects areas rather than an accurate line. And what we want to now see is the market to pull back a bit more tightly to this area, because there's still 30 odd pips in it. We want to see the market push this level, and then we can look to enter the trade for continuation to the downside. Now, when I was monitoring this trade over the past few weeks, I was seeing that retail sentiment was to the upside. And sure, great, it certainly looks like that. If we look at it from a daily perspective, we can quite clearly see that the market has posted a very nice trend to the upside, and now is at, some would say, the retracement, and is going to continue to the upside. And retail sentiment was indeed buy bias on this pair, but it was not buy bias, as we can see. For those retail traders who don't zoom out and look at the overall time frame, it is clearly in a downtrend. The banks and institutions who make money move, they are the ones who post these price action patterns on the chart. They are making money move to the downside. So we should not be trading with retail sentiment at all. In this instance, we should be only looking for sell opportunities. Okay, so on replay mode, obviously, we'll see how the market plays out. Okay, so this is the first sign and where I posted on our club that people should pay particular attention to this trade. What can we see? We can see that the market broke past the previous high, but it's now with this candle formation here, and I'll zoom in there, it is showing signs of bullish depletion. Momentum is no longer with the bulls, and perhaps there are some more sell orders coming into play. Now we know, or we certainly have analysed, that this is going to be an area where the retracement is going to end and people are going to start selling. But the third tip to succeed in Forex is to know what the banks are doing. As I said previously, retail sentiment was to the upside, completely wrong in my opinion, and this is what caused people to get stopped out and lose money if you were trading this. How do we find out what the banks are doing? Well, on my website, commitmentoftradersclub.com, I have created the perfect tool on the COT reports to find out what institutions are doing. So we're trading USD Swiss franc. So we're going to the Swiss franc. What day was this round? It was around the 30th of June. Now, the commitment of trades reports are traded against the US dollar. So this is actually CHF USD, but we want USD CHF, so we just reverse the data. Now, what can we see? We can see here that the net positions on the CHF are bullish. They are long at first glance. You can see that they've been building their positions on CHF. You know, from the 11th of May, they were -2 or nearly 3k net positions to the downside, and now they are 11, 10, or even 13 at one point, 1,000 net positions to the long side. The Swiss franc has been building strength over the past month or two. So around here on the 29th, we can see here from the previous report they had closed some longs and added some shorts, but the overall momentum was to the upside on the CHF. Evidently seen here they had 18,000 net positions long open and only 7,000 net positions short open. Now, reversing the results, as we want to find out USD CHF, this tells us that the CHF is in power of strength. Push this onto the chart. We know that the Swiss franc is stronger than the USD as they've got more net positions long. Therefore, we can anticipate that the market is going to go in our favour. Retail sentiment is to the upside, fantastic. Banks are going to make their money from all the stop losses, and they're going to bring the market back to the downside, and we're going to enter into that and cash in on our trade. So what do? We zoom out onto the 4 hours. We've got our three confluences and our three tips. Number one, trading with the trend. Number two, our fib level has been reached, and number three, we are on the same side of the market as the banks, most importantly. Now, as swing traders, we're looking for pip movement rather than, you know, sniper entries if you're a scalper, for example. So we can be a little bit more relaxed with our entries. And what I did, I put on my personal account and also posted in our club membership program, was put a order pending on the retest of the 618 zone. We always trade a 1 to 3 risk to reward. We can be wrong 7 times and still be profitable. It is silly not to do it. And my target is at the bottom here, where price had previous wick rejections. It's a good take profit one. We've got I had it a little bit larger than that, didn't want to get stopped out. An almost 1 to 4 risk to reward. So we've set our trade up, we've got it as a pending order. All we have to do now is sit back, relax and watch the market play out. So let's see you over there in a minute. And there we have it, guys. That is a fantastic trade that occurred over a few days, 3 or 4 days. We cashed in well in excess of 100 pips, 117 if we're being precise, with a nice 1 to 4, so it's actually more than our 1 to 3 trading plan rule. We've got that extra safety net and we are in the money. Now guys, if you want to be a part of these fantastic swing trading signals, please head over to our website, Commitment of Traders Club, become a member. Won't cost you an arm and a leg like most of these other trading memberships, and get access to free education, learn how to use the Fibonacci retracements, get access to our signals, and also clear, concise Commitment of Traders data. Guys, thank you for watching. Remember, before I let you guys go, the 3 rules: trend is the friend, Fibonacci, and where are the banks moving their money. With all that being said, I wish you all the best in the markets this week. Stay safe, happy trading. Bye bye.